good evening, depending on where you're at. Happy Sunday, guys. Hope you had a great weekend. Sorry, I'm doing this a little bit later than I normally do. For those of you who might be joining us new here, I usually do these updates more in the afternoon, Central Time, but something came up this afternoon, so I had to shift it to tonight. Evening, great to see y'all. Hey, guys. Frank, always good to see ya. So let's talk about the market, right? We'll talk about what's happening right now. We'll go over the $500 challenge, um, and then we'll work from there. Hey guys, hey Green, Hoter, Kulak. I'm probably butchering all your names, so I do apologize. Yeah, let's go exactly. So starting off with SPX overall, right? So we've been in this bearish trend on the daily chart. On the weekly chart, it's been a healthy overall pullback into support. We went down towards the 4,200 level, held that for the most part, saw a few dips below it, but overall 4,200 was the main support level here for this market. And then we had a great stair step up the last 2 weeks. And, usually the market ebbs and flows a bit more. So when people typically see this kind of move happen, and it happens rather quickly, it's not too surprising for the market to take a pause, catch its breath a bit, see if this move can actually continue, or if this is just a move up into resistance and we go back down. Certainly, we saw into the close Friday a really good job of holding these support levels. This was something I actually mentioned all throughout the day in my sessions over at Simpler, was even though the morning kind of looked iffy, I was like, guys, let's hold our trades into the close. Let's not take any action just yet, because what I don't want to see happen is exactly what happens, where we kind of trade down here, everything looks weak, and then all of a sudden, right, either people who are short are taking their profits at the end of the day, or people are seeing that price and they're thinking it's a good discount. And so you have this buying or you have this short covering, and in turn, it props the price back up. And so what we ended up seeing was that the open and close of this bar are still basically trying to hold the 10 and the 100 period simple as support. Now, 4,600 is a really big level that I've been talking about certainly the last few weeks here in the $500 challenge. And I mentioned that this was going to be the big level to watch, that we need to see if we can end up breaking above it or if it's going to hold as a resistance. And the reason why this is so important is because back here, right after the first initial flush to the downside and we tried to find some support, we had the bounce up and it went right into the 100 period simple at the time, and it also went right up towards 4,600. And both times we were not able to break above that level. The high on this bar was 45.95 and 31 cents. The high on this bar was 45.90 and 3 cents. So both times we went right towards 4,600, weren't even able to make it up for a true test, failed basically at that level, and then we had the sell-off back down to 4,200, arguably a little bit stronger because we did dip that one day down towards 4,100 to test that. So now we see this, once again, great bounce back up, pretty strong stair step to the upside, and this time we are actually able to break 4,600. We're actually able to hold it for 2 days, and arguably Thursday for the majority of the day we were trading up into that level until right into the close this really started to sell off, which right makes sense. It's quarterly expiration, so things can be a little bit funky around that in general, but we sold off, and then we went right into the technical support of the 100 period simple and the 10 period simple. So the fact that we're still trying to maintain this level, to me, is showing that it's attempting to hold support. Now, whether or not it's going to be able to is still up for debate. And there are a few things weighing on this. Let's talk about that. The first thing is the momentum. So the awesome oscillator tracks momentum, and it is at the top of the axis, and it's starting to show a red bar. So it's confirming that the top of the axis is still the top, and therefore we could potentially see exhaustion here. And with exhaustion, doesn't necessarily means the price needs to pull back, but it usually means it either pulls back or it consolidates, right? It usually takes a break. And so back here, for example, was the last time we were at the top of the axis for exhaustion. And what happened when the red bar started to print? The price went flat. Then we got a little bit more of a pullback down to support, but basically we consolidated overall, and then momentum really started to dip below that zero line, and in turn, so did the price. So now we're back at exhaustion levels again to the upside. And the question, of course, is going to be, is this hinting more at just that chop sensation where we continue to hold the 100 and the 10, that this bounce is going to be a little bit stronger lived, that eventually we will break above 4,600 and in turn go back up and to test the highs at 4,800? Or is this going to be a bit stronger of a pullback? Because this was such a great run. It wouldn't be too surprising to get a little bit of a dip back down here towards 4,400. That would be right in line with the ATR trailing stop. It'd be right by the 30-period simple. I certainly wouldn't mind that, right? I wouldn't mind playing that to the downside. But that's the question, if whether or not we're going to see that. So we're starting to get exhaustion. And then we're also starting to get a consolidating signal in the compound breakout tools. So this is leaning more towards the chop rather than the pullback. And of course, on Friday, we did end up with a bullish divergent bar. Now, bullish divergent bars on Friday, I personally don't usually like to take a trade off of. It's not that they don't follow through, they certainly can. But I have found for the divergent bars that end up failing, quote unquote, they're more than likely to happen on a Friday. Not always the case. That's just something I've noticed over time. And so usually on Fridays, I look more at weekly chart setups for divergent bars if I'm trading anything around that specifically. But, right, it goes without saying that we did end up closing that bullish divergent bar, and that, of course, could follow through with a higher high, maybe a test into 4,600 on Monday or early in the week. We'll have to kind of wait and see how that works out. What's interesting are the Bollinger Bands, at least as of right now, are still pointing to the upside. They're not flaring open as strongly as they were back here, but they're still pointed up. And so when they're still pointing up, that means they're still overall anticipating that potential move higher, and they're making room for the price. So really, once again, the 4,600 level and of course the level we're at right now are kind of our two key levels. We could still end up chopping within that range. We could start to see a break in one level or the other. Certainly if we break this level here in 4,500, then I would be playing this down to 4,400. And if it can't hold that, then 4,300, of course, is the next big target, which isn't just, a psychological level, but it is a place where the price has held it both as resistance, like here, and as support back here. So it is, a level in that sense to be mindful of too. If instead we continue to hold the 100-period simple, then of course this first target is 4,600, followed by those recent highs right around 4,625. That's usually an intraday mini psychological level to be mindful of. And of course, if we can really start to break that, 4,700 will be a level that we go and test. But my big target next to the upside is towards 4,800, or maybe just a little bit shy of that range, right? With the idea that ultimately we will go up and test those prior highs if this ends up holding as support. And let's go to the weekly chart. So the weekly chart here is kind of confirming that consolidation thought process, right? Here, Bollinger Bands are flat. The 10 is in between the 30 and the 100-period simple. Momentum's resetting towards the zero line. We have a great low compression squeeze that's been building up. That's usually, something that happens along with consolidation. So that's really not surprising that we're here. What's interesting, of course, is on the weekly chart, we made a bearish divergent bar. So, of course, just like a bullish divergent bar has that probability of some sort of higher high within the next 3 bars, a bearish divergent bar has that probability of a lower low within the next 3 bars, right? So it could be that maybe we go up early next week to test 4,600 again, it fails, and then we get a stronger pullback, right, down into that 4,400 level, and we get the lower low to satisfy with this, right? And this, of course, could take up to 3 weeks to potentially see if it does end up following through. Of course, on the weekly chart, right, notice where the 10-period simple is, 44.16, so right by that 4,400 level. So it's not only a strong daily support level, but it's also in line with the weekly. And usually when that happens, of course, the price is a bit more respectful of it when they stack up like that across multiple time frames. But it's a similar tale here, right? If we can really break 4,600, that next target to the upside with resistance here is right by our prior highs and right at the top of the upper Bollinger Band where it's flattening out. If we really got a sell-off back down, of course 4,200 is going to be that really big target to the downside. Notice that the Bollinger Bands are completely flat on the lower end. So if we start to sell off, unless they flare open, they're not anticipating a break of this level anymore. And should we, be surprised about CHOP overall, let alone if it happens this year? No, because one of the things I've been trying to stress to y'all, I feel like since October of last year, is that we have reached a point of exhaustion. We started to see red bars on momentum try and print in October. Now, they didn't quite print, right? And so we did continue to trickle higher because everything was bullish. But once it finally printed in January, right at the start of this year, what happens? We've seen a bit of a pullback and we've been consolidating. On the monthly chart, this looks just like pure consolidation. And so what is allowing to happen is for that momentum to reset towards the zero line. And when momentum is allowed to reset, right, it can then build up that energy again for a new run. We saw this exact same thing happen in 2015, 2016, where the price really didn't get a strong pullback necessarily. I mean, of course, if you looked at it on a daily time frame, there were pullbacks, right? Just like on a daily time frame where that slight bearish trend or were. But on the monthly viewpoint, right? This is a consolidation. That's all this is. It's just taking a breather. It allowed momentum to reset, right? It allowed that energy to build up. We saw monthly squeeze build up. We saw the bullish sentiment start to pick back up again and our compound breakout tool and momentum picking back up from the zero line. And then we had a great run. So should it be surprising if this pullback? No, because certainly from the pandemic lows, this has been an excellent run to the upside. So shouldn't be surprised to see that at all. If anything, right, I'd be kind of curious because of how the Bollinger Bands are acting, is if this is actually going to go back into a bullish trend maybe a bit more quickly. Now, I'm hesitant to say that, and of course we need to keep things in context, right? The stuff that's happening this year is completely different than what happened in 2015, 2016, right? Both from a standpoint of inflation, both from a standpoint of rate hikes and supply chain issues, to, of course, the Ukraine-Russia situation. So we're in a completely different environment. We need to keep that in mind. And a great way to always be mindful of that with our market environment is through risk, right? Being mindful of our risk capital when we put it in to begin with. Always keeping that first and foremost in our thought process. So that way we're never overloading the boat. And if we get a crazy move due to a news event or anything like that that happens, we're prepared for it in the sense that we still have capital left in our reserve to be able to play off that accordingly. So that is what I think overall, right? I think it's going to be a choppy year personally. So to see the weekly chart setting up like that, right? To see the daily chart starting to turn a bit more into consolidation again isn't too surprising. What does that mean for us? Well, that means one, we need to be okay with the direction potentially both ways, right? And two, of course, on top of being mindful of risk, is being mindful of our levels, right? That's why I tried to give y'all levels to think about for this upcoming week as we go to trade, because those are typically things that are respected in this market. We've seen a lot of times, even when things were selling off, where we might be chopping within a 100-point range the one week, we drop at the start of the next week, but then still find ourselves chopping within a 100-point range because we're being respectful of those levels, throughout this trading environment. So that's what this year is. Chop is the name of the game, right? Until it proves otherwise. So let's continue to be mindful of the levels that we see and be mindful, of course, of our risk and trade accordingly. So so that's what I see for SPX. Let's go on with the $500 challenge. We did a few trades this week. So let me pull those up. So here is the account that I do the challenge in. It's in my Thinkorswim account. Most of my other accounts are all in Tastyworks. But here in Thinkorswim, right, we did 3 trades last week. Now, all of these just look like open because I let all 3 trades cash settle. For those of you who don't know, the beauty about trading SPX options is that it is one of the few symbols that cash settles, meaning that there is no risk of assignment on shares. So, certainly from a day trader's perspective, like have the mindset of half the time, I feel like. I love being able to take advantage of these intraday moves, but of course, in an account under 25,000, you are limited with the day trades that you can do. And of course, for the $500 challenge, I am only using an account starting off with $500 at the start of the month. So there is no way, right, that I can get flagged in here as a pattern day trader. I would get in trouble. So one of the nice things about SPX is you can open a 0-day expiration just like we did on each of these days, but rather than closing it out, which isn't a bad idea. If you are able to close it out, I certainly tell people on these trades to consider doing so, because sometimes the market will reverse, and if I have to end up taking a loss, you still might have been able to take a profit, a little bit earlier in the trade when it was showing that profitability before it reversed on me, right? So it's not to say that if you are able to day trade that you shouldn't, especially if you do multiple contracts too, right? Pay yourself, take those profits. But the benefit for me trading it in such a small account is that I can let it cash settle. I don't technically have to get hit with the day trade. And in turn, I can try and, grow my account that way. So that's one of the ways that we've been doing it this year. As you can see, I've only traded 3 things in the challenge this year. Traded quite a bit more in the Profit Recycling Mastery, but in the challenge, we've been trading Amazon, SPX, and Tesla. And Tesla's been my loser this year. SPX at the start of the year was actually a loser, and now we've been able to turn that back around. And then Amazon's been pretty good too. Amazon, to me, didn't really set up this week, and we can talk about that in a second for the sell-off Thursday into Friday trade that we've been doing on this. So glad we didn't do it, if anything, because I feel like it helped protect our capital. We probably would have had to been quick to take a profit on it. So we just did SPX this week. So let's start off with the first trade, which was on the 28th. It was the 45.65, 45.75, 45.80 call. We jumped into this for a $1.60 cost basis. Let me zoom in here. Where did SPX close that day? So we did get that run up, and we closed up 45.75.65, right? Right by our pin strike. Well done, right? If you took that trade, I, hope you were able to either lock in the profit early by doing the day trade, or if you let it cash settle like I did, then, it was certainly a very nice profit to take off our $1.60 risk. So let's just do the math here for those of you guys who are new to butterflies. You take in this case, these are broken wing butterflies, and these are special in the sense that on a standard butterfly, you typically need the price to stay within what are called your 2 wings, your 2 long strikes, the ones that you buy to open. And that is the 45.65, 45.80. But in this case, our spread width is slightly different. This is what we call a broken wing butterfly. And I, certainly have educational videos out there, guys, especially at Simpler, going more in depth about this stuff. So if you're brand new to trading options or butterflies, certainly go check out some of those videos. But the benefit of a broken wing butterfly, the way I have it set up at least, is that if the price really moves in your favor, right? So we thought this was going to move to the upside. So we opened the call side trade. I thought there was a good chance we might pin around 45.75. So that's why I made it my quote unquote pin strike. That's usually the best profit potential that you can get on any butterfly, typically, is at the pin. But the forgiveness factor comes in because let's say this really continued up to 4,600 into the close, like it just blew everything out of the park that day. I would still be able to walk away with a profit on this trade because it's a broken wing butterfly rather than a standard butterfly. So that's the benefit. That's why on a lot of days that you see me open this style trade on SPX, I typically try and keep it as a broken wing butterfly. Sometimes I'll do a vertical if the cost doesn't, change it up. But I'll usually do a broken wing butterfly because the broken wing butterfly is cheaper than the vertical. So it's a smaller risk, which I'm all about. You guys know that, right? So smaller risk. but it still allows for the forgiveness factor if I'm right on the direction, but the move ends up being explosive at the close, which sometimes happens, especially in the current market environment with all the volatility that we've had. So that's where we set it up. To figure out our profit potential, we take the wider width of the spread. In this case, it's the debit spread side of the butterfly. So this is 45.65, 45.75, 45.80. So one side is 10 points, the other side is 5 points. So we take the 10-point side. That's, basically the spread width. We settled off of it 56 cents from that point, right? That was the 28th. Yeah, the close was 52, 45.75, 52. So we were 52 cents off from the pin strike. So 948 was the actual settlement close of this trade, right? The cash settlement, the money brought back into your account was 948. But of course, we paid money for that trade, right? We put some money out there as risk, so we need to take that into consideration. So we take away from that the 160 capital cost that we paid, and 788 is our profit for the day. Now, depending on your brokerage platform, some of them charge you, little settlement fees on SPX, so your actual profit might have been a little bit less than that, of course, depending on your fill or depending on if your account has settlement fees with it or not. I don't think Thinkorswim has settlement fees with SPX. I know Tastyworks does, unfortunately. But usually, right, especially when it's a profit like this, it easily covers your settlement, fees, whatever they are, and you're still very nicely net ahead. So I usually still don't mind doing those kind of trades in Tastyworks, but it's just something you have to be aware of and know. So very nice profit, right? 788 off our one contract. Technically, you times that by 1 because we have one contract. It's 100 shares per contract. So it was a $788 profit off of our $160 of risk. So not a bad risk versus reward. Obviously, just within this trade alone, right, we're technically able to double our account size of $500. So we, have over $500 now in the account, 788 in profits just from a risk of 160. Not a bad risk versus reward there. And I know it's simpler. We talked about, what we were looking at on this trade. I think we were watching resistance levels break. I'd have to go back. It's been such a long week, guys. I'd have to remember the exact thought process of why I liked that trade over another. I remember Thursdays, certainly, and Fridays thought process too. But yeah, I'd have to go back and look at the charts. But obviously, we thought it was going to get a run up into the close. And certainly, the 75, I already know why I chose that strike. That's a mini psychological level, guys. So 75, 25, and of course, 50 and the hundreds, right? The big round numbers. Those are all psychological levels. Now, the big round numbers in 50 are usually a little bit more respected on things like a daily chart and certainly a weekly and a monthly chart, of course. On the intraday charts, they're just as much respected, but I have also found, it, at least in particular on SPX, that these 75 and 25 levels can also be respected on the intraday. So sometimes they're respected on the daily, but not as much as the intraday charts, I would say. So when, certainly we're looking for that move up, this is within our, risk tolerance. 45.75 is a very nice psychological level, and lo and behold, of course, we close the day right by it. So very nice profit to lock in there. And then the next day, right, Wednesday, next 0-day expiration for the week, we jumped into the put side, 45.80, 45.70, 45.65, a little bit off from that 75 level. Keep our cost a little bit lower, right? It's all about maintaining a risk tolerance that makes sense for your account. So that's $1.55. And we, on the 30th, this one I think we lost on, if I remember correctly. Yeah, we closed up 46.02. And I remember this trade too because everything looked like it was going to start selling off. So this one I do remember too. You usually remember the losers more than the winners. But we were selling off and we were starting to break levels on the smaller time frames. And that was it on the hourly chart here. So to me, it looked good that we would go down and test the ATR trailing stop and 30 into the close. And that is right around 45.70. It, of course, I liked this trade too because it encompassed the mini psychological level of 45.75. So if we stalled just right below support, the idea is that we could still walk away with the profit on the trade. It kept a 155 risk. But I talked about this trade in the Profit Recycling Mastery. I'm usually live on the mic whenever I'm putting on these trades, so people in the mastery are hearing in real time exactly what I'm looking at, the strikes I'm looking at, my thought process behind it. And I mentioned that that day might be tricky. We might actually get a bounce back up towards 4,600 because of how strong a level this has been and how big of a level it is on the daily and longer time frame, right? It's the level that we failed at last time. And on Wednesday, we saw the last day, right? Let's zoom out just a tiny bit here. So we saw on Tuesday that we gapped up, held 4,600 as support on the intraday, right? Kept testing it, but we held it, and then we ran up into the close. So then here we're falling back, and we're starting to break. And this is where I'm like, oh, okay, it looks like we're going to go down and test support into the close. Let's prime something there. But as we start to stall around 45.85 and we weren't really breaking it, I was talking in the mastery on the mic live, and I mentioned, guys, wouldn't be surprised if we bounce back up towards 4,600. Now, I didn't want to just throw more capital out there, right? To me, sometimes, even when I'm correct, like on the move, it sometimes feels like you're almost chasing it at that point. So it's like, okay, I can either put more capital out there and hope that I am right, and still, nix this out and walk away with a profit. Or what's going to end up happening is I'm just throwing capital out there, might not get any sort of pin, and now I've stuck myself with a bigger loss. And so the question, of course, in those kind of cases, you have to ask yourself, am I okay putting on that extra capital risk? And usually for the challenge, the answer is just almost always no. It's like, no, I'd rather not, right? This was the risk I was willing to put out there. That's the trade that I thought was going to work, and it didn't work. And so I need to be okay with that risk. And of course, right, if you're in Monday's trade, well, that was easily covered. We're still net ahead for the week, just off the 2. But 4,600, man, did it act like a magnet into the close. We closed at, I think 46.04 is what I mentioned. Oh no, 46.02 and 45 cents. But we closed right by that 4,600 level. So anyone who did have a butterfly at that range, well done. But it certainly acted like a magnet. And then for most of Thursday, like I mentioned, we were holding up there. But on Thursday, which was a zero expiration day, normally Thursdays are not, but because it was the end of the quarter, not just the end of the month, but the end of the quarter, that is why there was an SPX 0-day expiration built in for Thursday, because usually quarterly expirations have those. And so on Thursday, I remember this setup too. I was just coming back into the house actually from an appointment I had. And I was setting up at my computer, and I was like, I don't even know if I'll be able to open one today, but if there's one I really like, then I'll try and alert it out in time. And I literally got here after SPX failed that and started to flush. And so what happened is on our 5 and 10-minute charts, we hit this resistance level here, and we were giving it up. Bollinger Bands were all flaring open, but more importantly, unlike back here, we had confirmation of this actually going to sell off because the ATR trailing stop was starting to break and these Bollinger Bands were flaring open. So unlike our technical put trade from Wednesday, which didn't work out, here, right, it felt, it still looked like a good trade based off the intraday. It's just 4,600 was too strong of a level. And certainly the pattern of the moving averages and everything else here was still very much bullish. Bollinger Bands were coming up to meet the price. The simple moving averages are bullish. Everything, is still looking pretty good. Here, right, we've put more pressure on it. The 10 is right at the 30. The Bollinger Bands are now flaring open rather than coming up to meet the price. We're giving up support. So all of this, especially with how the intraday, the smaller time frames were opening up as well, all of that looked good that we were probably going to flush into the close that day. And so what trade did we do? We put on the 55 45, 45, 45, 40 put. Once again, it encompassed the psychological level of 45.50, which I liked, and it was within my risk tolerance. Usually I like a $1.50 or less. I feel like this week I ended up paying a little bit more, and I guess it paid off, right? Paying that tiny bit extra. But I paid a little bit more than that $1.50 risk I normally like, or less, obviously. Paid $1.60. Um, but that's what we paid for this trade. And in this case, this is a great example of why I like the broken wing butterflies, because we are totally right on the direction, right? This thing gave it up into the close, but we are way off on the pin. We ended up closing that day at like 45.30 something. Yeah, 45.30 and 41 cents. So we were way off technically on the actual pin close, right? If we wanted the pin close, it was at 45.45. But this is why I really like broken wing butterflies, because on a standard butterfly, right? If we did a 10-point standard butterfly, let's say, and still kept the 45.45 pin, well, our other wing, instead of 45.40, would have been 45.35. And if this had gone completely in the money on a standard butterfly, we would have lost. We would have been right on the direction, but because SPX closed at 45.30, we would have lost on the trade because we weren't within our wings. But on our broken wing butterfly, because it is a different spread width, this is how you figure out your profit. So you don't technically have to do all these steps, but I'll walk through it with those of you who are new so you understand how it works. We know that this is a 10-5 broken wing butterfly. Our debit spread is 10 points. Our credit spread is 5 points. So we take the 10, the wider width of the debit spread. 10 minus 5 is 5. So this is completely in the money. That means it cash settles for 5. It cash settles for the difference of spread width. So that's what it cash settled for. You got $500 technically recycled back into your account. Once again, minus whatever fees your brokerage platform might have. And of course, we paid $1.60 for this trade. So minus $1.60 is a $3.40 profit. Once again, the profit, let's say you missed Monday's trade, but you took Wednesdays and Thursdays. Well, Thursday's trade still covered Wednesday's risk, right? Let's even take that into consideration here. Cover Wednesday's risk, and we still walk away with a 185 profit, right? Still technically 100% return on just that trade alone. So, not a bad week. Overall for the year right now, we're almost at 3,000 profit. And guys, if you haven't already, I have in this account, pay yourself. Pay yourself, right? If you're in an account where you're able to do that, I feel like one pitfall that traders sometimes fall into is that they just keep trading over and over with their profits. And of course, if it's one thing if it's an account that you'll get like flagged if you're pulling out of money from it, like an retirement account or something like that. But if it's like a cash account or like a margin account where you're trading these spreads like this, please make sure that you pay yourself, so that you know that you've done what you're supposed to with your trading, right? That you've put money back in your pocket, that you're putting it towards savings, putting it towards whatever, right? Vacation, night out, whatever you want to do it with. But just make sure you take your wins, because each month, right, we're only technically trying to risk the $500. So as we go into April now, I guess I should pay myself more. I left like 1,000 in here. But technically speaking, right, we're starting the month fresh. So we're starting just with that $500 of risk, and we'll see how much we can grow it by the end of the month once again. And for those of you who don't know, I was going to start the giveaway this week, but there is an issue with the link. I like sent out a tweet about it. But for those of you who are new or don't know, I do a profit recycling mastery over at Simpler Trading. And so I am going to do a giveaway for 1/4 of that for free on my Twitch stream. Obviously, because today was just such a jumble with me being late in general from when I normally do this, we'll just start it next week. So we'll do the giveaway next week, and I'll see if we can extend it out for one more week. But then that way, you guys, come in. We'll still do the Sunday reviews and everything like that. I'll give y'all the link to where you can sign up. And if you want to sign up, it's just a fun little giveaway we wanted to do. You guys can join me on the mastery, and then you guys can also see in real time how I'm putting on these SPX trades. So yeah, definitely, definitely. And yeah, so what indicator is the purple dashed line on your charts? I'm guessing you're talking about the one on the intraday chart. I don't use it as often, honestly. Um, I would even have to like look up the technical name on it. It's a simpler indicator, but I don't use it as often as I used to. Dynamic profit zones is what it's called. Oh, and I did mention that. So, guys, if you aren't able to jump into a trade, I did mention I'd talk about this really quickly, and then I'll let this be our signing off topic. But let's say, I jump into a trade. You guys like the idea, but it's starting to move, right? Well, there are a few things you can do. One, you can sit on the trade and just see if it comes back and fills for you. Sometimes, right, the price will jump around a bit. I've had people, come back to me saying, "Oh, I got a favorable fill on that," or I was patient, and it came back and I got this kind of fill. So you could always wait to see. It's a little bit harder sometimes because, of course, this style trade that I'm doing on SPX currently is like right at the close that we're putting it on. The other thing though is if you're like on Wednesday's trade or Thursday's trade, for example, right, where I meant Thursdays, where just where it goes in our favor, but it really goes in our favor. One thing you could do is say, I still, kind of like the strikes that you're at, but it's starting to get expensive. Just go one strike set down, right? You could consider doing that if you still think that's a viable target for SPX to go into the close. So 45.50, 45.40, 45.35, right? That still would have worked out exactly the same way my trade would have, given how the setup is in the close. And it technically would have been cheaper than what I put on at my trade, right? Because it's further out of the money. So if this is all of a sudden at $2 and you're like, man, I really like this trade, sometimes just going down that one strike set is all you need to do to get in where your risk tolerance still makes sense. Now, I say that on the note that you still think SPX will reach those strikes, of course, right? If I, put on a trade and you're like, man, I barely think SPX is going to reach that level. I don't know. That's really iffy. Then, you might just skip on that trade. But of course, guys, just like we saw this week, I mean, just like we saw the last few weeks, right? Let me just pull up 2 weeks, right? Look at all these SPX trades we've done. I've done one where I've closed it out. I think that might have been my 1 day trade I did. But everything else, I let cash settle. So, and of course, right, my point of showing this is to show you that there's plenty of trades out there, right? So if you miss one, don't worry. There will be another one. The point is to make sure the risk, right, the capital risk is really within your range, because you don't want to have yourself overpay and then have that be Wednesday's trade where it ends up being a loss, right? You have to make your risk make sense for your account. And of course, on the trades that we're setting up, we're also making sure our risk versus the reward, right, versus the max profit potential still makes sense for our account too. So that way, like when we saw this week, when we have a losing trade on Wednesday, we know it can easily be made up by just one winner potentially. Just one winner can hopefully make up that risk and still keep us net ahead. And that was a great example of this week overall. Oh, thanks, Azza. Yeah, I'm glad you're liking the mastery. It's a lot of fun in there. We have a lot of fun, so. And thanks for all the follows, guys. I appreciate it. But I hope you, gave you a sense of, on at least some of these SPX trades, what I was looking at going into the close for them, what we did this week on the challenge. So we had our update, and what I'm looking for into next week on the market, right? I'm still not quite sure which way this is going to move. If it's going to move, it could just chop the entire week. But I've certainly marked levels for you guys to be mindful of and what to look out for depending on how we hold them. So I hope you guys have a wonderful rest of your evening. For my simpler folks and for the rest of you out there, I look forward to talking to y'all next week. Have a great trading week, my fellow Jedi. May the trade be with you, and I'll talk to you next time. Bye.